So let's listen into what he has to say now.
Okay, I would like to make a few observations to capture the essence of today's monetary policy. And I would like to make a few points. First, the years 2020 to 2023 will perhaps go down in history as a period of great volatility. Number two, India's GDP growth remains resilient and robust as reflected in our projection of 7% growth for the current year. Third, on the inflation front, the summer of 22 is behind us. We have made significant progress in bringing down inflation. The steady decline in core inflation indicates that monetary policy is working. But don't rush into any conclusion. Please wait for the next point. The fourth point is, moving forward, inflation management cannot be on autopilot. The future path is expected to be clouded by uncertain food prices. CPI data for November is expected to be high. 5. The MPC will be highly alert to any signs of derailing of the ongoing disinflation process. Based on evolving situation, the MPC will take appropriate action to reach the 4% target. 6. Liquidity will be actively managed consistent with monetary policy. 7. The balance sheet of the financial sector remains robust. Sectoral and institution-specific signs of stress are being proactively monitored and addressed. We do not wait for the house to catch fire and then act. Prudence at all times is our guiding philosophy. 8. Current account deficit is expected to be modest and comfortably financed. 9. Foreign exchange reserves at $604 billion provide a strong buffer against global spillovers. 10. The stability of the Indian rupee reflects the improving macroeconomic fundamentals of the Indian economy and its resilience in the face of formidable global tsunamis. I'll stop here. Thank you.
Thank you, sir, for those opening
And what I propose to do is that, a copy of this we will just upload in our website so that it is easy for, all of you to do the reporting. Thank you.
Thank you, sir, for those opening remarks. Before we go ahead, may I request my media colleagues, please wait for your turn to be called out and restrict yourself to one question each. If time permits, then we'll go for another question. Sir, I'll begin by inviting Mr. M. Govardhan Rangan from Economic Times to ask his question.
Good afternoon, Governor. This time, in terms of monetary policy, you have taken out all the surprises. It's kind of the next topic that you raised in terms of the financial stability, when you say that you won't wait for the house to catch fire. So last time you saw some smoke in unsecured loans and doused it. So which are the areas where you see smoke now, in the sense for you to say that you won't wait for the house to catch fire? Thanks.
You see, as a part of our supervision and as a part of our very close and proactive monitoring of the financial sector and individual financial institutions, our endeavor is always to remain up to date. We have deepened our supervisory methods. Our endeavor is also to use or try to use the smell test also. I have talked about it earlier. So whenever we smell any stress building up anywhere at the system level or at individual entity level, we deal with it in the appropriate way.
Yearly, you are warning about the unsecured loans for quite some time before you acted. Is there any segment that where you feel there is a warning unnecessary now?
No, I cannot spell out. As and when something like that becomes necessary, we will act. At this point of time, as I have said in my statement today, that the balance sheet of the Indian financial sector continues to be robust. And all the financial parameters of NBFCs and banks at the system level as well as at individual level, they also continue to be well above the minimum regulatory parameters, whether it is in terms of capital adequacy or in terms of provisioning for bad loans, or even on issues of, even on the parameter of profitability.
Thank you, sir. I'll move on to Ms. Lata Venkatesh from CNBC TV.
Thank you, Yogesh. And thank you, Governor, for asking people to drop the word honorable. I think that's an extremely honorable statement to make. Thank you for that. So questions. For the first time, you have used the words, regulators should also be mindful of over-tightening. Can we therefore expect the interbank call rate to come towards the repo rate of 6.5? It has been at 6.75 for the better part of a couple of months. On the issue of financial stability, you have just said that connected lending framework will be to strengthen the pricing and management of credit by banks. Does this mean that there will be a little more tightening? Will that be the net result of that framework? And just a doubt which comes on this connected lending.
That is the third question.
So it's connected to connected lending. When you announced the unsecured loans, was there a worry that bank loans are going to stock market? Because there was a report from Ashish Gupta that derivatives are now 400 times.
Okay.
Is there any fear that this money is going there?
Whatever was in our mind, we have spelled out. These are precautionary measures which we have taken. Our endeavor is always, our effort is always to act proactively before the, the bubble bursts, before the stress builds up. We act, our endeavor, our effort is always to act proactively. And I have stated very clearly that these are preemptive measures, which we have said. Just hold on. And with regard to connected lending, I would request DG Rajeshwar Rao to please answer that question. And with regard to the other thing which you said about...
mindful of over-tightening.
That over-tightening, we always take a balanced call. I would request DG Michael Patra to reply that. I will supplement thereafter if need be. So first DG Rajeshwar Rao and then DG Michael Patra.
Thank you, Governor. I think there is a bit of a misunderstanding between interconnectedness and connected lending. When we talk about connected lending, it's essentially the lending to persons who have the position to control or influence the decision of a lender. So it is in that context that this guideline on connected lending is being conceived of. Right now the regulations vary between the regulated entities. There are scattered provisions. So in order to bring about uniformity in the process of these regulations, we are coming out with some draft guidelines which will help to clarify the position and have a uniformity in the regulatory approach to connected lending amongst all regulated entities.
If you've noticed, in the first few days of December, the call rate has already started gravitating towards the repo rate. And in fact, on the 4th or 5th, it was 6.45 sub-repo. And you will see that this is coincidental with government spending. Government balances have been coming down, and therefore, so the previous tightness was also associated with build-up of balances. Okay, and on the over-tightening, I think I'll let the author.
You see, we have always tried to take a balanced call. And this is not the first time that we have said. What is our monetary policy as prescribed in the law? Primary target is price control in terms of maintaining 4% inflation, which I have emphasized. I have emphasized it very clearly in my statement that 4% is our target. I mentioned it again here in my opening remarks. And the law also requires that we have to keep in mind the objective of growth. Last year in May, we spelled out that when we shifted our focus from, when we shifted our focus and prioritized inflation over growth, that same approach continues. There is no change in stance. It is to place things in the particular perspective. I have tried to explain the overall approach that central banks adopt, and in particular the approach that Reserve Bank has been approaching. Our decisions, as I have said, are dependent on two major parameters, that is inflation and growth. Inflation is our top priority now. We have still a distance to cover to reach 4%. So therefore, the use of the risk of over-tightening should be read along with the previous part, the previous sentence, where I think I have said that a few months of good data should not push us into some kind of a complacency.
So our colleagues from the press are interacting with the governor and some important points are being made. Let's go back to the communication with governor and his team is doing.
I think that is really the intention and not unlikely to be the outcome of the measure which we have actually announced. Now coming to the governance issues, I think broadly we say that through the supervisory process we have a close monitoring of the various parameters of the functioning of the regulated entities, which includes governance, business models, risk management, compliance, etc. So it is a package which monitors the entire functioning of these regulated entities. So if there are certain concerns about the regulated entity insofar as governance is concerned, action would be, there would be an engagement with the concerned entity to take appropriate action as may be necessary. Mr. Swaminathan, if you would.
Thank you. Just to supplement on that, on this up to 50,000 category, to put a context to it, the composition of that particular segment is less than 0.5% of the total outstandings. So while of course it may be dealing with a lot of number of people, it's a segment that cannot pose great risk on its own because the total quantum itself is less than 0.5%. That's in terms of the context part. The second is that we have, as I mentioned, that we have what we would like to curtail and expect the lending institutions to provide for more by way of additional risk weight is some of those consumption-led segments or unsecured credit which do not have a defined end use. We have taken care to exclude, to support whatever growth drivers are already there. So whatever lending that was taking place for which a clear end use was not visible or completely unsecured without a clear purpose is what will get curtailed. Basis this, there will be some recalibration of business models, also recalibration of the growth numbers. That is what is the intended effect of the regulation. So if it is playing out, I think that is only giving the intended results. And as DGMRR clarified, it is not our intention to deny or ration credit. I think there are enough headrooms available. The exposure framework permits adequate lending to be provided for supporting the growth. And on the second part, again to supplement on that, governance and effectiveness assurance function has been on top of our priority. So from a qualitative perspective, while of course quantitative parameters, the entire financial system looks very good at this point in time, what we would like to focus is on the qualitative parameters. So that is how you see, it has always been a focus area, but you might hear us more on governance and the effectiveness assurance functions because we feel that strengthening of these two is what will ensure a continued stability of the financial system. So that's why the emphasis is. Thank you.
Thank you, sirs. I'll request Ms. Shyama Mishra from Doordarshan to ask a question.
Hi, Governor. Are there any external factors that are looking promising for the Indian economy?
That are looking promising for the Indian economy. I think the major factor is that I think there is growing international confidence on India's economy. Our interaction with, my interactions with governors of other countries, our interaction with various other regulators and stakeholders and other investors in particular from other countries, major investors who visit India, and some of them do come to RBI and meet us. I think there is a growing confidence in the potential of Indian economy and India's capacity to grow. I think that is probably something which is which is really noteworthy. And with regard to that also translates into another area, namely I think confidence from the point of view of investment, making investment, confidence also from the point of view of, that is a kind of a confidence in the quality of Indian products, and more particularly the quality of India's services exports. There is a greater trust, confidence on the quality of our merchandise exports, on the quality of our services exports. That is the inherent quality and the strength of all that we are doing. Is there anything else you would like to add? That's all.